Hi, welcome back. You're tuned into Midcap Radar on CNBC TV18. Well, as we were speaking about the HDFC results before we went on a break, so NII has come in at 4,065 crore rupees, which is largely in line with the CNBC TV18 poll of 4,025 crore rupees. We are also watching out for an AUM growth of around 11 to 12% on a YY basis, and there's an expectation that net interest margin will improve on a YY basis, but it will decline on a quarter-on-quarter basis. I'm watching out for the details from the press release. It talks about how the company has done. For the year itself, the company has done well. There is a 19% growth in individual loans, but this is actually for the year. This is actually for the whole year. We're trying to get the quarterly numbers, but on the basis of the numbers that we have on the bottom of our screen, let's get in some reactions. We have Lalitab Srivastava, Associate Vice President BFSI at Sher Khan Limited, on the phone line with us. Lalitab, good afternoon. Well, what is your first take on the numbers?
Yeah, hi, good morning. So first thing I would be looking at is the gross NPAs reported numbers. So the reported numbers are at 1.98 on an overall basis, 7 basis points higher than the pro forma gross NPAs on a sequential basis. So a lot of other companies, a lot of other banks and financial institutions have reported numbers which are, an improvement on a sequential basis. Even though on a comparable basis, HDFC loans are still at a very manageable level, but by 7 basis points higher. That is the first thing that I would see. PAT-wise, PAT has come much above expectations. I'm still going through other numbers.
So I'll just give you some more details, Lalitab. In the press release, they say that overall collection efficiency ratios for individual loans have improved, nearing pre-COVID levels. The collection efficiency for individual loans in the month of March 2021 stood at 98% compared to 96.3% for the month of September 2020. Of course, now here we are talking about the March quarter, but a lot has changed in April. What would you say about the collection number that HDFC has spoken about if you compare it with the other NBFCs?
So collection efficiency seems to be on the healthy side, so that is a good thing. Secured lending of HDFC is always a strong cushion for asset quality challenges. So that this quarter also looks to be playing out.
Okay. All right, so hold on, Lalita. We have Abhishek Kothari with us, who will tell us how the numbers really looked this time around. Abhishek?
Well, the numbers look much better than expectations. You look at the NII growth of 12.3%. We were working with 11.3%. The profits are also on the higher side. On the NPA front, there is a slight hiccup, especially it might be the non-individual gross NPA which must have increased quarter on quarter, because the overall gross NPA is up 7 basis points sequentially, with individual gross NPA being up only 0.01%. So non-individual portion must have seen an increase over there. The net interest margin for the whole year is at 3.5%. Now this compares to 3.4% that they had in the previous quarter. So I'm comparing FY21 with Q3. Remember that. So there is a gap in Q4 which shows that there is strengthening in the net interest margin. Overall, the AUM growth is around 10.28% on a YY basis and about 3.2% on a sequential basis. Now this is slightly on the lower side. We were working with a number of anywhere between 11 to 12% in terms of HDFC's AUM growth. The restructured portfolio, now that's declined a bit, to about 4,479 crore. This compares to about 4,900 to 5,000 crore in the previous quarter, because it was at 0.9%. So from that I'm calculating the 4,900 to 5,000 crore level. If you take that into account, it's down almost about 10% on a sequential basis. So it's a good result. Numbers are better than estimates, and the stress on balance sheet has reduced quarter on quarter. Back to you.
All right, Abhishek, thank you so much for giving us all those details. So numbers look better than what the poll was, the numbers coming in from the CNBC TV18 poll. Let's get in more reactions then. Kunal Shah, analyst at ICICI Securities, joins us on the phone line right now. Kunal, you heard Abhishek. There is slight hiccup on the asset quality, but otherwise the numbers look good. What is your take?
Hi. So overall, in terms of the asset quality, I would read it in terms of the overall stress pool. So be it in terms of GNPLs plus restructuring as well. So when you look at restructuring from 5,000 crores, that's down to 4,500 odd crores. So there is almost 500 crores. It's on the lower side. And stage 3, in fact, when we look at last quarter, their stage 2 had gone up from 5% to almost 7% plus. So in terms of some flow through from stage 2 to stage 3 was expected. However, when we look at it in terms of the overall numbers, it doesn't seem to be substantial. And when we look at it, it's very much in line with the expectations. And in fact, provisions have come in lower than our expectation. We were building in slightly higher credit cost, but what has come in is lower than our estimate.
Okay, all right, Kunal, thank you so much for joining us. So that's the word coming in from the analysts, that the numbers look decent, but of course management commentary is something that we'll be watching out for. So that's about HDFC. The stock is doing well. It's up around 2% as we speak. A spike coming in there, but with that we'll slip into we'll actually take your leave on this edition of Mid Cap Radar now. Your stocks when we return.